Good Thursday morning, everyone. We are back on the floor of the New York Stock Exchange with Jim Cramer to break down the rebound in stocks. Jim, from yesterday's declines.
Yeah, look, this is significant, if only just because what's happening is different stocks are going higher. We have a plethora of technology stocks that are going higher, and they're all being funded by the departure of Broadcom investors who are seeking, trying to find anything. They're buying ServiceNow, they're buying Salesforce, one of our favorites, of course, Action Alerts name. They're buying Texas Instruments. They're just across the board buying that group. And then yesterday I said on our club call that this was your chance to buy oil. You got a rare dip in it, so they're buying the oil stocks. So they're going to different groups. It's I would regard as a healthy rotation after a jarring day about tariffs. And there's also money going into the defense sector, as we predicted on yesterday's club call, Raytheon being the easiest way to placate our president.
Okay, you mentioned Broadcom. They're agreeing to acquire CA Inc., which is real money stock of the day. Were you surprised?
Right. Yeah, I was surprised. First of all, Hock Tan deserves a little bit more benefit of the doubt than the stock being down 40. Hock Tan being Broadcom's CEO. I know CA for a very long time, back to when the Wongs, let's say back to the 1980s. And I have historically felt that when the mainframe and client server were king, CA was the software company to play it. They're not kings anymore. They're not cloud kings anymore. So I think that what's happening is people are saying, you know what, this is a mainframe buy. The mainframe is basically slowing and going away. And what they would have preferred is something like a VMware, which you're never going to get because the stock's too expensive. Hock likes to buy cheap 13 times earnings. But you wanted software-defined network and software-defined storage. And this is hardware-defined, and hardware-defined is what people are going away from. Now, if you go to CA's site, you will see that there's a tremendous number of companies, including all the banks, that still are on the mainframe. So it's not like that there are no customers. But it is like the fact that it's not a growth business. So what Hock has to do is slash and burn. He's got to take a lot of costs out. Some people feel he can take out $1.8 billion in order to be able to raise the free cash flow, raise the gross margins. It is rather extraordinary how, if you were thinking that Hock was going to do a semi-deal, which is what he said when he was on Squawk on TheStreet in February, this is the antithesis of a semi-deal, which is why there's such revulsion to it.
And you got out of Broadcom for Action Alerts.
Yeah, we sold it much higher. And as I said on the club call, maybe much lower, maybe lower, we can look at it. But I feel that the dynamic has changed rather dramatically, and it's going to take all the analysts, almost all the analysts, Bernstein analysts likes it. It's going to take a huge, let's say, exodus from the buy list. And then when that exodus is complete, maybe we can look at Broadcom again, because I do believe in Hock. But this did upset the shareholder base in a way that frankly I've never seen. And there is so much money was in it, and all you got to do is look at the semiconductors away. And this could be a good opportunity to pick up some NVIDIA, by the way, which is an Action Alerts name. NVIDIA, Broadcom is a cheap stock, and on multiple, NVIDIA is expensive, but if the money's coming out of Broadcom, it's going to find its way not just to Texas Instruments, but it will find its way to NVIDIA.
You mentioned some cheap stocks. You highlighted a bunch of them in real money this morning, including J&J, which is trading at...
J&J is at 15 times next year's earnings. Now, Jamie Rubin, who I defied on Allergan and was wrong to defy, the Goldman Sachs analyst, told you to sell J&J, and the stock went down. And the S&P went up, and now she's switching, going to a hold. I think that this is brilliant. This is what you always want analysts to do, because what she does, she's declaring victory ahead of the quarter, which I think is going to be a decent quarter. And I think when the quarter's reported, the stock is going to go to 135, because I think that there are multiple drugs in the pipeline. It still is a AAA balance sheet. It's still incredibly well run by Alex Gorski, $300 billion company. I think that it makes that Jamie's got a home run here.
And
congratulations.
In your real money piece, you also talk about how cheap the banks are. Citigroup.
Yeah, I mean, JP Morgan 11 times. Citi is remarkable, around 10. Remember, Citi's going to buy back if it's this price right here, they're going to buy back 250 million shares this year. Can you imagine? 250 million shares. And here it sits, well below its high, Action Alerts name, just waiting to be bought.
And certainly club members heard that yesterday on your Action Alerts Plus call.
Are they going to run what are they doing with the...
Yes. So we're going to have some clips on TheStreet.com, but I think people should go to ActionAlertsPlus.com, join the club, and watch the replay in its entirety.
Thank you, Scott. Thank you. That would mean a lot. It would mean a lot. The club is robust. People like the club. Got some very, very good feedback. And I would emphasize to people that it's a broad range of... There's 40 companies that were discussed on the conference call. It's a 55-minute call that I share. But most importantly, there were a lot of insights about pop, about my dad, and about what happened to the industry that he was in because of the PRC. And I think it'll lend you some knowledge to what's really going on in the president's mind, which is heavily influenced by Peter Navarro.
It was a heartfelt story, and it was great to hear, Jim. On a lighter note, you had the CEO of Canopy Growth on Mad Money last night.
Yeah, this is an important company because Canopy is the one of all the Canadian companies that are doing marijuana. I mean, a lot of people wanted me to talk about these penny stocks, the little ones, but of all the Canadian companies, here's what you need to know. It refines the product, and it also makes the product into different formulations. The soft gel caps, which a lot of people want, which have a THC is what people really need to worry about when they buy pot. It'll have the amount of THC in a rough range in its pills and all its product, and its product's going to be commercial. There'll be people who just want all cannabis. There'll be people who want THC. I think that their sleeping pill is going to replace Ambien, Xanax, and Klonopin. It's a really big prescription market. And for the first time, we heard that there will be drinks available, cannabis-infused drinks that will give you the buzz that a beer will, but not gain weight and not give you a hangover. Now, I know you may think, why is Jim going into this? Because what I'm trying to do is say that if you want to own a stock, and I know many of you do, in the marijuana category, the most legitimate, there's a little Alpha GTI, which I really like, but I can't send people to that because it's very small. The most legitimate big cap name in the group, the one that is where Rob Sands had bought 10% with an option to buy another 10. If you don't know Robbie's Constellation, good housekeeping seal approval by Modelo Corona, Rob Sands. This is it. And now you may think that Bruce Rislin, well, you don't want to, the stock's up 300% already, you missed it. What I would suggest is for those who actually want to own something ahead of the October 17th Freedom Day in Canada, if you insist on owning something, I'm going to send you to Canopy because it is the most legitimate larger cap stock in the group, and it trades on the New York Stock Exchange. That's why it's so important.
Jim, I just have to ask you about the Tweed and Tonics. If Bar San Miguel had a location in Canada, do you think this would be on the menu?
The TNT? Absolutely. That's what people are going to have. I mean, look, the man is talking about consumer products made out of cannabis. And I think that the border will see a tremendous number of Canadian companies right on the border of the United States. And you're going to see the cannabis that is from Canopy. You go to the website and you'll see exactly what I mean. They just changed the formulation of the website the other day. But what matters is you'll see the plethora of products. And you'll realize that the soft gel marijuana product is going to replace a lot of aches and pains, opiate drugs, and related drugs that are addictive. And I think that it's going to be the most revolutionary way to be able to deal with pain and sleeplessness we have ever seen.
All right, and Canopy Growth seems to be getting a little bit of a Mad Money boost. Stock was up this morning.
Look, it's up gigantically. I'm totally cognizant that people say that they missed the move. All I can tell you is, again, I repeat, it is the stock to own if you're going to want to own a marijuana play.
Jim, who do you have coming up on the show tonight?
I've got Sage Therapeutics, terrific postpartum drug with a great CEO, and I have a company called Vistra Energy. Now, you may say, I don't know who that is. It's Dynegy, and it's one of the largest electricity producers in the country, and it is a very well-run company. But I want to know their dividend strategy. I want to know their growth profile.
All right, we'll be watching tonight, 6 p.m. Eastern on CNBC. Jim and I are going to continue talking about stocks on ActionAlertsPlus.com.